Is the dollar about to crash the stock market? That's a question a lot of investors are asking themselves right now, and for good reason. A strong rip in dollar can have a massive impact on the global financial system. We saw that firsthand recently. Last year, as you can see here, the dollar had a huge run. This run actually began in May of 2021. And from May of 2021 to September of last year, the dollar index increased 28%. That's a tremendous move. Remember, we're talking about the world's most actively traded currency, world's most actively traded asset, to be more precise, not some small cap stock. So when the dollar moves like this, it has a massive ripple effect across the global financial system. So the stock market got crushed when this was happening. Bitcoin got hit hard, and bonds had their worst year ever last year. So this is why so many people pay very close attention to what the dollar is doing, just because it can affect all sorts of different asset classes. And I bring that up because when we look at the dollar right now, it appears to be putting in a potential local bottom here. We could see that after breaking this uptrend that it was in for much of last year, it sold off hard, and then continued to sell off, and didn't really bottom until February or January of this year. So buyers stepped in at this 100, 101 level, as we can see here. And from there, it rallied up to this 105, 106 level where it got rejected, and it's pulled back and it's testing this 101 level once again. And so at this point, I think you have to be bullish near term on the dollar, possibly even intermediate term. And at this point, I think we'll come up and most likely retest this 105, 106 level again. And then whether we reclaim this level or get rejected at this level has huge ramifications for risk assets, particularly the stock market. So if we can reclaim this level and get above it, I think it's a possibility we could come back up and test these former highs here, which would mean another big move in the dollar. That would not be good for the stock market, most likely. But there's no guarantee that happens. So we just have to take it one step at a time, one day at a time, 1 week at a time. When we look at the dollar here, the next level that I'm eyeing is this 105, 106 level. So if we come up here and we don't break through and get rejected, that could be it. That could potentially be it for this dollar rally that we're watching right now. After all, the dollar is still in a downtrend. We can see it's below its 200-day moving average, and it just had a parabolic blow off top. So when we look at the weekly here, we could see that it had the dollar index, went parabolic, had a blow off top here, and then came crashing down. There's no reason to think that the dollar is just going to begin another parabolic advance right away. Moves like that often require a lot of energy, and that energy is built up over time. So I think there's a possibility that we come up, retest this level, and then get rejected, and then the dollar spends more time trading sideways, or even possibly heads lower from here. You got to think, if this was a stock, and most people were looking at this as a stock, or this was a crypto, or whatever, and you were looking at this, and you saw that the dollar was putting in a bottom here, and it was about to rally, you would most likely say that's a bear market rally. So I don't see any reason to view this differently just because it's the dollar and just because a lot of people are bearish right now. I still think we have to respect the fact that the dollar had a massive move from 2021 to late last year that ended in a blow off top. So to me, this is still in a primary downtrend. So that's how I'm thinking about the dollar, and I hope you found this video helpful. Thank you.